Hi, I'm Omar here at Trinity Finance, and in this video I wanted to talk to you about development finance and the process of obtaining development finance from start to finish. So, depending on whether you are a new developer or an experienced developer, and depending on whether you are building one house or whether you're building 300 houses, we here at Trinity Finance are specialists in arranging development finance. We have access to in excess of 50 development funders, and we know the process of building properties out of the ground, inside out, or whether it's a commercial conversion. So let me talk you through how to get development finance. To start with, if you're a new developer, I must say the process is more long-winded and it is a little bit more complex for you to obtain your first development finance. There is this grey area of, are you experienced enough to build a property? What expertise do you have? And what track record do you have? The main caution for the lender is essentially you not being able to deliver the development and therefore not being able to repay their money. So there are lots of checks and balances in place that the lender and the funders will be looking to ascertain that you're going to be able to exit. So if you're a new developer, there are things that you can potentially do to make yourself more fundable, and that will be making sure that you're working with a really good team around you, a planning consultant, an architect, a structural engineer, perhaps a really good JV contractor. But if you are a new developer that's looking to take on quite a big scheme that's out of your remit of what you've done before, perhaps you're looking to build 5 houses and you've only just ever refurbished small properties in the past, you will find that a lot of the development finance providers will want you to have a very experienced contractor on board who has delivered 5 houses in the past. Some of the development finance providers will actually want you to joint venture with the contractor, so they'll want the builder, the contractor, to also be party to the loan and involved in the development. And that's essentially just because lots of the time where development goes wrong is where a contractor doesn't deliver, doesn't finish the project as was proposed, and perhaps leaves the site halfway through, causing big problems for the developer to finish. If you are more experienced and perhaps you've done some schemes already, you've delivered a small house scheme, 9 flat scheme perhaps, and you're looking to scale up to some bigger projects, then we have lots of funders that will look at your gradual track record of delivering better and bigger schemes and are happy to lend. Interest rates vary depending on your experience and the appetite, whether it's houses, flats, and what location it's in. So the appetite for this will vary. Lots of development finance now is linked to the base rate or SONIA, and so it can be variable depending on what's happening with interest rates in the country. So that is another factor for you to consider. So if you've bought a piece of land or you're looking to buy a piece of land with planning or without planning, if it's without planning, the likelihood is that you're just going to need a bridging loan, or perhaps you have the cash to buy the land outright. We can help you with that. But if you're buying a piece of land with planning, then the funder would like the first question we normally get asked is about the pre-commencement conditions and the planning conditions. So we'll ask you to start looking at those and seeing which one of those you're in the process of getting discharged or which ones you have discharged already. Then from there, we'll go through details around the contractor, the total cost of works to deliver the scheme, including any contingencies, and we'll scrutinise that with you directly. And finally, we'll look for you to provide comparable evidence for the sale or the refinance of these units at the back end. And that normally is best done by you approaching various new build agents in the local area and getting them to give you comparable prices and putting together a bit of a spreadsheet based on price per square foot, how much they're likely to sell these units for. So we're looking for those key things: the purchase of the site with planning, the conditions, getting those discharged, the type of build, the cost of build, and then how you'll exit. And that will allow us to put you in a really strong position where we present you to a funder, present your scheme, and we're able to show that there is enough margin, even if house prices come down and you're unable to sell these properties for what you anticipated, your build cost overruns a bit more than anticipated, that there is enough margin that the funder will get paid back and you will still make a profit. So, few things to mention if you're looking at high loan to value development finance. Now, what I mean by high loan to value is more than 70 or 75% loan to GDV. So if you take the end value of the development site, let's, for example, now say you're building 4 houses, and these 4 houses are going to be worth £500,000 each. So your gross value of the site is £2 million for the 4 houses. Now, if you're looking to borrow more than 1.4 to 1.5 million total gross loan against that site, you will find lots of lenders are unable or unwilling to lend to you. Certainly the mainstream development funders. And if you need more funding than that 70 to 75% loan to value, loan to GDV, then you may need to look at another type of product called mezzanine finance, which we can talk to you about, or perhaps you need some kind of joint venture funding. If you are happy to borrow a maximum of, say, 70% of the purchase price and 100% of the build costs, but keeping your loan to GDV under 75 or under 70%, then there are lots of lenders that will have appetite. Now, I mentioned location because there are some locations which certain lenders don't like to lend in, and there are some areas which are saturated with flats that lenders don't like to fund. So it does depend on the project, it does depend on the risk, and it does depend on your profile as a developer as to whether the lender would be happy to lend to you. So do feel free to get in touch. We can review the site. We're happy if you want for us to sign an NDA, a non-disclosure agreement, if you're not in control of the site yet, perhaps you're still in negotiation of trying to buy it, or perhaps you've moved further forward and you now have an option or a promotion agreement on the site and you want to talk to us in a bit more detail. We're happy to have a meeting with you where we can review your funding options. We can then start to look at what interest rates you're potentially going to pay, any arrangement fees or exit fees that the lenders are going to want to charge, and work with you over the next year to 2 years whilst you take your development site potentially through planning and through build onto exit. So I hope that helps. Any questions, get in touch and we'll speak to you soon. So the easiest way to get in contact with us here at Trinity Finance is to send us an email at info@trinityfinance.co.uk, or you can simply fill in the contact form here on the website and we'll speak to you soon.